Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 important things to pay attention to for the upcoming trading week. Now, over the past 8, 9, 10 months, we've talked about inflation and how it kind of felt like the Fed was getting it wrong. They were understating inflation, saying it's transient, and all of a sudden we saw a huge surge in inflation, and that has become the main talk track for financial markets and central banks around the world. Now, that discussion is going to get even deeper this week as we get the next round of economic announcements that have CPI and PPI numbers. So let's start there. Consumer Price Index, as you guys know, is what it costs you and I to buy a specific basket of goods and services. Does that basket go up in value over time or go down? That's inflation or deflation. Well, on Tuesday at 8:30 a.m. Eastern Standard Time, we get our Consumer Price Index numbers to come out. And you can see here that for the past year and a half, it's been aggressively to the upside, showing high inflation, which I'm sure many of us are feeling at this moment. The previous month, though, we dropped all the way back down to zero. And right now, the expectations are that we're going to see inflation numbers for CPI at negative 0.1. Now, that's a big thing because it means a contraction, a decline in inflation overall. But that's not the whole story. We have to take into consideration producers and what it costs them to make this basket of goods and services that we buy. On Wednesday at 8:30 a.m. Eastern Standard Time, we will get the PPI numbers, Producer Price Index, and you can see on the hard red edge there, it was negative 0.5 on the previous month. That was a shock to the system. I think most people were really surprised that it was that much of a contraction in inflation, which of course is a good thing for most of the people in the economy because that means prices are starting to decline. What are the expectations for the previous month? Well, they're expected to be at zero, meaning that the markets are expecting no real change in the producer price index. So they're expecting PPI number to stay the same and CPI numbers to drop ever so slightly, which is a good thing for the long-term perspective of the financial markets. Remember, Jerome Powell and his team have been very aggressive. The last meeting at Jackson Hole, they said some very pointed and negative comments about the economy. But if we start to see inflation slow down, the Fed's talk track may lighten just a little bit. And right now, the expectations are that there's going to be a 75 basis point raise on the 21st of September. That may drop to 50 basis points if these inflationary numbers show a lot of retracement, if you will, in the inflationary cost. Now, let's look at our next piece, which, of course, we talk about America being a consumption-driven economy. How do we consume? We buy stuff, and that leads us to retail sales. Now, with retail sales, I decided to start with a chart that goes all the way back into 2014 to give you a little bit of perspective of what price looks like. You can see we were pretty much normal until COVID hit, and then these wild swings up and down. So let's zoom in a little bit closer so we can see what's been happening more recently. If we look at the finer details here, you can see that we have had some tumultuous times over the past couple of years, some above zero, some below. Now, ideally, as an economy, we want numbers to be above zero, meaning people are spending, retail sales are increasing, and they're consuming and spending money, and that drives the economy. Well, the previous month was zero, and right now, the expectations are that we're going to come out at zero yet again. So not the best news out there from a consumption perspective that retail sales are going to be at zero. We have decent news potentially with Consumer Price Index and PPI Index. However, if retail sales stay at zero, that isn't a real great sign for economic growth. We want it to be positive. So keep an eye on that one. That's going to be Thursday at 8:30 a.m. Eastern Standard Time for that announcement. Now, finally, for me, probably the most important announcement of the week. Now, for many of you know, I teach a program for Online Trading Academy as well with Cameron Kaiser that is called Crypto Investor Live, or the CIL. And in that program, of course, we're dedicated to cryptocurrencies, all things digital assets, decentralized exchanges, swaps, automatic liquidity pools, automatic market makers, tons of information there. And it's exciting because it's growing faster than any market segment I've ever witnessed in my 24 years of trading history. Now, let's dive a little bit deeper into this. Ethereum, which many of you may know, is the second largest cryptocurrency in the world. At this point, it has some serious problems because Ethereum runs off a technology called proof of work. Proof of work is essentially where they take very high-end computers called ASIC miners. It stands for Application Specific Integrated Circuit, ASIC. Now, those mining devices use a tremendous amount of power, and the more of those devices you have, the more money you can earn as a miner of Ethereum. However, we're at a point right now where regulators are going, you can't do that. It's stressing our energy grid, and they're debating doing away with proof of work mining, which is what Ethereum uses. Well, Vitalik Buterin, who is one of the founders of Ethereum, has said many years ago that he wants to move away from proof of work and go to proof of stake, which uses about 95% less electricity. This certainly be better for the environment and maybe give Ethereum a little bit of an advantage. Now, how easy is this to do? How do you go from proof of work to proof of stake? Well, let me explain it this way. Let's imagine we are all right now, everybody watching this around the world is on a steam locomotive, right? You've got some guy up in front shoveling coal into the furnace and trying to keep that temperature right. It was an inefficient, dirty way to maintain a train. However, they look cool, right? As this train's going down the track, it's doing 50 miles an hour. And the conductor says, I want to switch this over from steam engine to an electric train. But the catch is, I can't stop the train, I can't slow the train down, I can't do anything outside of normal operations. Well, how do you do that? Right? That would be a monumental feat. And that's what Ethereum is going to be pulling off, hopefully, fingers crossed, be pulling off this Thursday, September 15th. Now, it's critical because this could have three major impacts on the markets. Number one is this all goes smoothly and all the uncertainty that's been piling up for the past year and a half over this specific merge, if it succeeds, everyone relaxes and crypto markets could have a pretty nice move to the upside. But what if it fails? What if this transition from proof of work to proof of stake fails miserably and all of a sudden markets freak out, crypto markets just implode and dive deep? That could happen as well. There's also a third piece, which I'm very excited about. Back in 2017, when Bitcoin forked, if you held Bitcoin, you actually received free Bitcoin Cash. Because you held Bitcoin, you were given for free Bitcoin Cash. At the time, Bitcoin Cash is worth thousands of dollars. Well, right now, Ethereum is going to fork, and it will be ETH still. So if you hold Ethereum, you're going to have Ethereum. But there may also be ETHW, which would be a fork of the Ethereum blockchain. When that happens, there'll be two separate chains. You'll get your Ethereum tokens, and if you know what you're doing in the crypto space, you can actually claim your ETHW tokens, which is essentially, yes, I can say this, regulators, it's okay. It is free money. It is a cryptocurrency that you held, and because you held this one, you may receive the other ones for free. So that's one of the interesting pieces about this Ethereum merge. But bottom line is it makes Ethereum much more powerful, and their odds of success and longevity increase dramatically if they can pull this off. That said, it's going to be a very interesting trading week. We've got inflation announcement, we have retail sales announcements, and a huge week for cryptocurrencies. That, my friends, is your Monday Morning Must Knows. We'll see you next week.